Hi everyone, this is Peter from the Mindful Share Trader blog, and in today's video I'm going to take you through a trade I've just entered. I'll show you my reasons for taking the trade, why I entered where I did, how I used position sizing to determine my trade size, and where I put my stop loss and why. Okay, so we'll get stuck straight into it. And the stock that I took the trade on, which was, I entered this yesterday, was an Australian stock, an oil stock called Santos. Okay, and you can see here we've got the weekly chart of Santos. It's been in a downtrend for quite some time. And what caught my attention with this stock a few months back was the massive amount of volume that was coming in down the bottom. And if you've followed any of my other videos where I've analysed the oil market, you'll see that the charts for the oil market have exactly this same big volume build up down the bottom, which looks like it's potential demand coming in. And when we see this kind of volume on a chart, we straight away start thinking, okay, there's somebody in there buying, the smart money are buying this. It generally takes them a while to accumulate, and you really want to be watching the stocks to get on the trade when you see that kind of volume coming in, because they're buying for one reason, and that's to see the price go up. Okay, now there's a couple of things on this chart that kind of stand out, and one of these is that you can see that this came down in a fairly steady rundown. We had a bit of a run up here, but we had some volume coming in here and here before it hit the bottom. Now this is quite usual, and this is preliminary demand coming in. Okay, so the smart money and the people in the know will buy towards the bottom. They won't buy right at the bottom, and they'll actually buy on the way down, because there's not enough supply around usually right at the bottom for them to be able to fill their orders. So they'll buy on the way down, and then similarly they sell on the way up as well towards tops. Okay, and we can see that we had this channel coming here, and every time this came back down, it's come down further away from this demand line here. And that's quite a bullish sign. It's kind of a shortening of the thrust type situation here, where every time this has tried to come down, it's come down a little bit less each time. Okay, so, and you get this kind of rounding bottom effect when that occurs. And we can see here that it finally broke through the top of this supply line here and broke that downtrend. And you know, as soon as I saw, I've seen that was straight on my watch list. Okay, and I've been waiting ever since for a suitable entry, really. What I wanted to see was higher highs and higher lows being made, and I've seen that here. There's a higher high here and a higher low here. Okay, so my criteria for a trade, and I have a few others as well, were basically met there on the weekly chart. So we'll have a look now at the daily chart, and I'll show you my reasoning on that. Okay, so here we are on the daily chart. We can see this is that long-term downtrend line that was on the other chart. We've got the break of that here, and then we can see that the price has bounced around and formed this channel moving up here. We've also got a support resistance line that I'd put in through here. So I really wanted to see the price kind of break up and hold above that before I decided on taking a trade, which it did after this point here. Okay. And you can see that the price has formed this over the last week or so, has formed this kind of apex in there. And I do like buying in anticipation of the breaks of these apexes, okay? And the perfect trade setup for me is to buy right in the end here. Now, the reason for that is that usually when these break either way, there'll be quite an explosive move. So I can place my stop fairly close to this demand line here, okay, and I'm not going to get stuck in a trading range with the stock going sideways, having to wait for it to make a move. I know that once I've taken this trade in here, after a couple of days, there's going to be a move one way or the other, which will prompt my decision to stay in or get out of the trade. Okay, and I find that for me is the safest way to trade. Okay, so if we have a look a bit closer at this, Also, just before I do, now just up here is a resistance area at $6.50, and I've marked that in there. And when I show you my position sizing, you'll see why I've marked that off. Okay. So if we're looking closer at this, we can really see this apex that's formed here. We can see how the prices come up and continually kind of bounce around this area here where the demand line is. Normally when I see a bar like this come down and then move up the next day, I will, look at buying in here. The only reason I didn't is I don't buy in till the end of the day usually. And there was a lot of volume on that bar, and it was quite narrow spread. So I really wasn't sure whether that was a lot more supply coming in on this bar. And I wanted to see what would happen the next day, whether this would break down through or sit there. Now, if you have a look at this bar here, which is the bar I bought in on, okay, it opened a little bit lower, but it never broke the bottom of this previous bar, the action on that day. So that told me that the buying was coming in at a higher level. And I basically just waited until it broke the top of these two bars here, and then I bought in at 4.44 towards the end of the day. Okay, and that's how I took my trade. I set my stop at 4.27 because that was right underneath this supply line here. So I haven't got a real lot of room to move. Like I say, this was either going to go up or down, and I had to be either in the trade or straight out. Okay, and my target is at $6.50, which is up here, which is this resistance, next level of resistance up the top up here. Okay, so we'll have a look now at my position sizing screen, and I'll show you how I worked out my trade before I even got into it. Okay, so here we have my position sizing screen that I use. It's just a spreadsheet that I threw together myself. It's got all the calculations in there. And you can see here it's quite simple. You put your trading account amount in up the top, which is 10,000. I can set my equity loss, which in this case is 1%, and that equates to $100 risk per trade. Okay, so I can have quite a few losses in a row, losing $100, and I don't blow up my account. I can put my stock buy price in here at $4.44. My stop loss price goes in here, $4.27, and that then calculates the amount of shares that I can buy. And that shows here as 588 shares, which is a total trade cost of $2,611. Okay. I can put my trade target in, which we saw on the previous screen, $6.50, and that then works out my total trade sell at $3,823 for a profit of around about $1,200. Okay, that's then a profit of 46.4%, and it also calculates my R multiple. Now, this is the risk-reward multiple, which is around about 12, which means for every dollar that I stand to lose, I have the potential of making $12 profit. And we can see that that's correct because we've got a dollar risk size of $100 here. That's the risk on this trade, and the potential profit is $1,200. Okay, so this is a trade worth taking. And anything generally over an R multiple of about 3, I will look at taking. Okay, anything under that is just not worthwhile. And you can see, if I had to move my buy price up higher because I can't get in at, $4.44, whatever. Let's say I was going to chase this up to $4.90 to buy in. My stop loss is still going to stay the same. You can see that the R multiples dropped down below 3, telling me that this is a trade not worth taking. And so this screen stops you chasing trades. Okay, and it sets your position size to manage your risk. So you're only ever losing $100 on a trade. Okay, so I hope that's been quite clear on that. And we'll see how this Santos trade goes. I'll update over the next couple of days, and we can kind of follow along with this trade. I'll put it up in my follow my trade segment on my site as well. So if you check back on the site all the time, you can see what's going on with this trade. Okay, so that's it for now. If you haven't already done so, subscribe to my YouTube channel. And if you go to my blog at mindfulsharetrader.com, you can subscribe to my newsletter, and as a free bonus, you'll also get access to my 3-part Trading Essentials mini course. Follow me on Facebook. I'm always on there to answer any questions, and thanks for watching. Cheers.